Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for February 8th, 2024. Well, my goodness, we had quite a rally yesterday, but it was interesting the way the internals of the market played out here, and I'll show you what I mean here in just a moment. But how about we take a look at what happened overnight? First off, we had Asian markets that were mostly up last night. As a matter of fact, the Nikkei made a 34-year high last night, and only Hong Kong was a little bit lower last night. Shanghai ended up moving higher as well, even though their consumer prices continue to fall more than expected. They've got a lot of issues over there to be working on. If we take a look at Europe here this morning, and by the way, this is very early. I'm recording this at 5:30 this morning, Central Time. We are looking at a mostly higher here in Europe this morning, with only the FTSE just a little tiny bit lower, but it really is modest gains and losses in Europe at the moment. It seems to be a little bit of caution there this morning. If we take a look here in the US, right now we've got all of our US futures looking slightly lower after such a big move to the upside yesterday, but I think there's still a shot with the earnings that we have today. We could go on higher, and I'll show you particularly where I think we're likely going to see here soon. If we take a look at oil, the Gaza peace talks aren't going very well over there, and so we've got oil moving up this morning. Oil's at $74.50 a barrel, Brent's at $79.95 a barrel, once again flirting with $80 a barrel, and natural gas is up this morning as well. We have bonds this morning creeping just a tiny bit higher. We've got the 2-year bonds at 4.43, and the 10-year is at 4.12. So what does all that mean for today? Well, how about we settle in, buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts. We want to kind of shake off any bias that we might have, and let's just take a look and see what happens if the bulls or the bears were inspired and how we might want to approach the market for today. Well, first off, as you can see, we are definitely in a bullish trend. I'm going to adjust this line just a little bit, but we are in a bullish trend here in the market, and it is very relentless at the moment. Unfortunately, we have a very thin leadership here in the market. We'll talk about that in just a second. But looking at this chart, I had mentioned yesterday that chance that we could pop out of here, and that's what we did. We popped out of there. If the bulls can continue to find that inspiration, well, first off, you can see we can try and test that up there to see if we can pop through those wicks. Every reason to believe that's possible with the earnings that we have coming today. And then there's blue sky above. If for some reason the bears were to find inspiration today, well, the first thing I'm going to do is I'm going to look right down across here. A little bit of price support right in that area right there. So watch that carefully. If we were to push down through there, then we might start raising a little bit of concern, because our next support is significant points lower. And that's the problem. We're moving in such big numbers that if we were to start to fall, we could fall hundreds of points really quickly. So be kind of careful. Make sure you're tightening those stops as we continue to stretch and stretch and stretch this market higher. We may be nearing that point in time where a pullback could come. But that being said, everything here is still bullish, so watch that carefully here in the chart. If we take a look at our SPY, I changed up the chart here. As you can see, SPY, I think what's happening right now is we've got an effort. In fact, they've probably got all of the 5,000 hats already printed up on the floor. They're sitting in a box waiting to see if we're going to pop that level. And I'm pretty sure we get this close, it's going to draw us right up to that big round number. But that being said, if the bulls can continue to find inspiration here, you can see that's going to be my target up here of 5,000. Big round numbers are natural resistance areas in the chart, and we'll watch carefully for that. If we were to pop up in there, then we might actually get a little bit of a softness or selling coming into the market. If we take a look at what we've got going here in, if the bears find inspiration, if they start pushing down, we'll notice we've got a little level right through here to push back down through there. And if that were to break, I'm going to suggest we come on down into an area right in here, and then next level lower, and that would be testing this upside trend here in the chart. So keep an eye on that if the bears were to engage, and just realize that if they do, there is a chance we can move in a pretty big way. If we take a look at our QQQ extended on up, broke through this resistance to the upside, so blue sky above. Big tech giants are still pumping hard. There's just seems to be an endless supply of buying, no matter what the PE ratios are. There is a belief in AI that just reminds me of the dot-com boom in 1999. We'll see if we can continue to support these prices, but watch that carefully. Blue skies above, if we can break that resistance in that little candle yesterday, every reason to believe we can as we continue to relentlessly push tech higher. Now, if we were to find a little bearish price action, well, the good news here in the Q is we created a little bit of price support right here. So a pushback right in here would have to have enough energy to drive us down through that area. Then, of course, the next level, as you can see, I've got a draw in here, would be down in here. Unfortunately, that could break this little upside trend and maybe raise a little concern in the market. And then, of course, below that, well, you can see where I'm going. And these could be some very big moves if or when they start here in the market. So once again, make sure you're raising those stops and protecting your capital here in the market. Let's take a look at our IWM. IWM is just still not finding any love. We don't have big tech in here, and so it just can't seem to get much energy here in the market. We continue to struggle in here. We're still well below highs in the market. I think IWM may be starting to give us some clues, though, of some future direction here in the market, and that would be a correction or a pullback. So we'll want to be watching carefully here for that possibility if we start selling off. We do have a downtrend going on here, and I mentioned yesterday we still have this higher low also in the chart, so we're wedging. We could continue to wind around in here for a while, trying to find some energy. But one thing I would be watching pretty carefully for, if the sellers do come in here, watch carefully in here. This could easily be the next downside move in the Russell. Breaking this support in here would really bring out some fear, I think, in the market. So watch carefully for that. But if the bulls can find inspiration here, well, you can see where the resistance lies. It's going to be right up in here along with that downtrend. So we get that little double whammy right in that area to see if we can push through that area of the chart. So watch that carefully. So let's take a look at the VIX. Our VIX, as you can see here, continues to show us no fear in the market. There is just no fear whatsoever. We're not scared about anything at all here in the market. continuing to push this down. So every reason to believe we could be coming back down in here into some of these complacency numbers in the market if the bulls continue to just relentlessly chase stocks higher. Watch that carefully here in the chart. There's nothing in here that suggests fear yet. I do worry that if it does kick up, it could kick up really quickly, meaning that it could pop up in here and really show some selling coming in fast at some point in time. Nothing saying that that's ready to occur, but watch carefully for it. If we take a look at our T2122, remember the T2122 is the 4-week new high, new low ratio. This is what was interesting yesterday. We had SPY and QQQ racing higher. And I mean really pushing to the upside, trying to make that 5,000 mark. And what I find interesting in here is we had more stocks going down than we ended up having going up yesterday. And that's a theme that's been happening. That's what I mean, that the leadership of the market is extremely thin. So we're going to want to watch that pretty closely here. I know everyone thinks, yesterday was so bullish, everything has got to be, just racing up. Well, here's proof of the T2122 of all the stocks out there, 4-week new high, new low. More stocks were declining than moving up yesterday, and we're right in there on that 50% area, which means if the bulls find inspiration today, we've got about an equal chance to the upside as we do to the downside. So that's why I keep saying, raise those stops, continue to stay with the trend to the upside, but raise those stops and be very, very careful about over trading this market, because if it does start to slide, and we have some reasons out there, we're starting to see some banking issues here again perking up, and some of that pressure could really start to move things to the downside in a quick way. So be careful. If we take a look at our T21 08 to T2108, the percentage of stocks above the 40-day moving average also declined yesterday. Instead of going higher, which we have all of this push to the upside in this very thin market, pushing up, pushing up, pushing up, we had more stocks moving lower than we did moving higher yesterday. And I know not too many people were probably expecting to see something like that. Now, the good news is we still have some support levels in this chart. So we could grab some support in here and still hold. It doesn't mean that we're going to collapse or anything like that. But we'll also want to be keeping in mind, if we rally, we're going to be rallying into resistance levels. And overall, this has been downtrending. We've been weakening here in the market with the majority of stocks moving lower. If we take a look at our T2107, which is the percentage of stocks above the 200-day, also declined yesterday. But the good news here on T2107 is we ended up holding support in here, so no major problem here unless the bears kick off and we start drifting back down below that area. If they keep holding on here and keep pushing up, we certainly have some resistance areas to be paying attention in T2107. But I do think it is interesting that we're seeing percentage of stocks above the 40 declined, percentage of stocks above the 200 declined, even as we were up huge points in the SPY and the QQQ. And the last metric that should give you just a little pause or a little concern, T2101, the breadth of the market. As we were zooming in the SPY and the QQQ, our breadth was declining. Not a good thing to see happening. We're having this divergence starting to occur here, where we just have a select few companies pushing the markets up, and we're just diverging here in this really big way. So watch this carefully. If we continue to see that push to the upside to tag 5,000, and yet we continue to see breadth declining, just be ready. Raise those stops and make sure you're protecting yourself. We need to see the breadth increasing on a buy wave, not going down. So watch that carefully. And one of the things that I fear could be coming in relative near future is that we actually see breadth increase on the sell wave. as the sellers come in. So watch that carefully here in T2101 as well. Let's take a look at the economic calendar here for today. Now, our economic calendar, we've got a little bit more to be watching here for today. We've got that jobless claims number, and jobless claims have been kind of problematic for us. They've been way too strong for too long, and that's giving us that uncertainty on rates. We'll want to watch that carefully. Consensus is suggesting 222, which is a little bit less than prior. We'll want to watch that one carefully here this morning. That comes out before the bell. We have more Fed speak in here. We've got a wholesale inventories number. They're looking at that increasing to 0.4, meaning, we went from a -2 to a 0.4. If that's correct, it means consumers are slowing down, and we'll want to watch that carefully. And there's a reason for that. If you saw those numbers, we hit record highs in consumer credit card debt of 1.3 trillion, household debt also hitting new record highs. So there's a reason that all those bills are going to have to start being paid, and folks may be slowing down here for a period of time. We've got natural gas coming in. We've got some bond announcements, more Fed speak here, and then bond auctions this afternoon. A 30-year bond auction will be interesting to watch, and then the Fed balance sheet. Then as we move into Friday, not much going on here at all. Baker Hughes rig count and some Fed speak to be thinking about. Let's take a look at our earnings calendar here for today. Now, our earnings calendar is pretty busy. We've got quite a few things on here. I can't cover them all, and because I'm not doing a blog, I'm just going to pull this over here. You guys can take a screenshot of that. So pause the video, take a screenshot so you have that full list of videos. The reason I can't do a blog today is I have to leave here pretty soon and go in for my pre-op physical, that foot surgery that I'm going to have. So I've got to go in for a pre-op physical for that. But let's go over a couple of these that we'll want to be paying attention today. We've got MT. MT is already moving higher here this morning, looking good on steel, and I'd keep an eye on that. Stocks like STLD made a good pop there yesterday, so watch that one. That could help out. We've got BYD that will be reporting. That's in a very bullish upside pattern that could move on higher. We've got ConocoPhillips that will be reporting, trying to hold that higher low and push on higher in Conoco. How about DT? DT looking, was looking pretty good until that earnings report. Getting kind of hammered down here this morning, so watch that one carefully. We've got old Harley Davidson that will be reporting today. We're going to hear from Kellogg's. Looks like Kellogg's is a little bit lower here this morning. As a result, we've got Masco that will be reporting today. Big pop, big move going on here. Breakout yesterday heading into this earnings report. So watch that one closely. And that's just a few of them. We're going to hear from like Under Armour today. We're going to hear from Save Airlines. We're going to hear from Philip Morris. We've got a lot of reports that will be coming in today. So keep a close eye on those. Let's take a look at some stocks that could be setting up for today. But before we do that, guys, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, well, do me that favor. Click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for those who do take the time to do that. I really, really appreciate it. Let's take a look at a few stocks here that may be setting up. And remember, guys, these are not recommendations to buy or sell any security. Make sure you do your own due diligence. Make sure you're following your rules, your guidelines. Understand the risk tolerance of every trade that you take, and never ever blindly follow anyone else's trade ideas. First off, let's take a look at a new alert that I put on yesterday. It was Marvel, and Marvel ended up popping that alert and getting really strong strong as we moved up so strongly in the market in the afternoon. So keep an eye on Marvel. Nice little trend going on in here. We had a nice little resting pattern that occurred right in here, made for a nice low risk entry into a trade. Stop under here and just watch that carefully. Now, if we do pull back after such a big move, let's keep an eye in here, see if that holds and then moves on higher in Marvel. Watch that one closely. Take a look at Teeva. Teeva continues to be a nice little chart, and notice we've just been moving up consistently here in this chart. Beautiful upside trend, and we've got this support level coming into play right here in our trend. So let's watch that carefully to see if we can just continue this pattern, rest this back over toward trend, look for that next opportunity to the upside in a Teeva. You know, I have been mentioning Plug Power here, and Plug, well, reporting and not getting a whole lot of love out of that report here so far. But watch that carefully as we hold this support. This is a nice little pattern setting up in the market. If we can hold support and hold trend, Plug is one of those you want to start not looking at just only the high flyers in the market. You want to start looking at some of these stocks that may be rounding up out of a bottom and coming back to the upside. And take a look at Plug. That one might be an interesting one on the list to see if we can push on through on this and start moving on up in Plug Power. You might also want to be keeping a pretty close eye on some of the high flyers. IBM continues to hold up in here. Not much for selling. We might be starting to show a little bit of interest in dipping into this gap. That possibility that we could dip in here. So you got to be careful with this chart. What we want to see is we want to see IBM kind of complete this little flag pattern in here, little pennant type pattern. See if that could pop through to the upside, and then we look for more upside potential there in IBM. There is some potential there. I do think it is worth watching pretty closely. I got to tell you, I am still interested in Verizon, even though it's pulled back pretty harshly here, and mostly because of this weekly chart. Now, if we can hold some support in here, I would be watching for that next opportunity into the trade. But I got to tell you, no love lost here. If this breaks support, creates a lower high in here, I'm looking for a potential short then in Verizon. So keep an eye on that. You want to take a look at American Express, AXP, continuing to stretch on higher here, just like we saw. I mentioned MasterCard yesterday. That's still trying to move on up, was stretching on higher yesterday. Now we're getting a little bit steep in here, but the way the market's acting, they don't seem to care about that. So watch that carefully. We could easily pop this on through to the upside. We have certainly seen Visa doing very well, and it popped on through 2 days ago, pushing on through to the upside. So keep an eye on this. If we can hold in this trend, look for that next opportunity to push on through on Visa. And I'm going to put one more on that list that could be interesting to pay attention to. Take a look at SQ. Now SQ has struggled quite a bit in here in this down move, but you'll notice we've kind of slipped out from underneath that down move here, and we're trying to put in some higher lows in that chart. Watch this resistance right across here carefully. If this can find enough bullish inspiration and pop through there, then that could be pretty interesting to be paying attention to. Now on the negative side of the market, I think we really got to take a look at this KRE. Regional banks are really in trouble, and we're starting to see that possibility of that failure of a bank coming up here. So that raises that fear, that concern, and that can put pressure on these banks. We could start seeing people being fearful, taking money out of these banks. So watch that carefully here. I think any rally back into resistance into this chart would set up a beautiful potential short there on KRE. I really don't want to chase it to the downside, but watch that carefully. We've got some concerns here in that banking sector, and I think there's a chance we could see some of that start cropping back up and being a little bit on the painful side here of the market. Let's keep an eye on, Hershey reporting today. Hershey was one that was trying to break higher. Man, that earnings pounding it down here today, so not much love in that chart. But on the other side of that coin, we had Disney. Whoops, got to type the right symbol. We had Disney perform really well after the bell yesterday, pushing through some major resistance, breaking above 100. Now, 100 is a natural resistance. It also becomes a natural support. So I wouldn't want to chase this here, but let this rest or pull back. If you're not already in it, rest or pull back and then look for your next opportunity into Disney, trying to show some pretty good signs there. Take a look at SHOP. You guys know I've been talking about SHOP for a while. Yesterday it finally made its move. It popped through that resistance and stretching on up here. We'll want to watch that carefully if it can continue that move to the upside. Certainly is upside potential in here. If we pull this back to a weekly, I would put the next target in that in SHOP somewhere around 92, and if we can pop through that, I think we're going back to 100 here in Shopify. So keep an eye on that. And 100 is one of those really natural areas that can draw stocks once you start getting close to it, draw stocks up to it. So keep that in mind. So with that, everyone, I want to wish you all a fantastic day. Thanks so much for being here. I do truly appreciate it. Keep a close eye on what's happening in that banking sector. Make sure you are raising those stops to protect your capital. The trend is long, stay long, but I would be starting to watch carefully. If we start to falter or stumble in any way, the move lower could be swift. So just make sure that you're prepared. Have an awesome day, and I'll see you right back here bright and early Friday morning. Take care, everyone.